Hello traders, today is the 21st of April. My name is Neville Hornsey, market analyst for trading, and today I'll be looking at the Dow Jones Industrial Average and some trading levels. Now, before we actually get into the Dow Jones, I want to start with Tesla because essentially we're in earnings season at the moment. Yesterday, we saw Tesla come out with Q1 2022 earnings. If we look here, that was better than expected. We saw adjusted EPS 3.22, beat the expectations of 2.26. Revenue came in at 18.76 billion, beat expectations of 17.8 billion. Now, that's all good, and the rest of the sort of metrics were also positive. However, the commentary was slightly less positive. We saw that they were talking about supply chains continue to have issues through 2022, mainly due to chip shortages because of COVID-19 outbreaks. Also, they're having to spend more money out of their cash and cash equivalents because raw materials have increased multiple fold. We obviously saw nickel go parabolic earlier this year, and we've obviously seen metals and other commodities rising, as well as essential materials for batteries. All right, going back to Tesla. Now I've got the Tesla S&P 500 chart overlaid. Back in December 2020, Tesla joined the S&P 500. In March of this year, Tesla announced that they were going to do hopefully going to do a stock split. So come first week of June with their general meeting, we're expecting the shareholders to approve a stock split, and that maybe will hopefully allow Tesla to then join the Dow Jones Industrial Average. Now, obviously, back in 2020, we had the pandemic. Tesla has dragged the S&P 500 up, along with all the other sort of tech stocks that we saw. We did see that since the S&P 500 allowed Tesla to sort of join, the price of Tesla has doubled. It went from around $600 to $1,200. So it's never a bad thing to have more liquidity from indices, and I guess the Dow Jones would be a good move for Tesla. All right, going to the Dow Jones Industrial Average, looking at the cash index. So this is the daily chart for the Dow Jones. Now we can see here that all-time highs came in on the 5th of January, so the start of the year, 36,948, just shy of 37,000. We've had a low this year of 32,231. If we look to the left, we took out some liquidity under these sort of swing lows from back in June 2021. So a year of trading has seen the prices sort of make an all-time high and also clear any liquidity underneath the summer of 2021. We had moves down where we had this obviously all-time high, swing low, a lower swing high, a lower swing low. Now, if you were to use the swing high from March 2022 as a gauge, because that acted as resistance, we've had this low, significant low, then a swing high, a higher swing low, and now a higher swing high, a higher swing low. And today we just broke over this price action from the 29th of March. So indicating that we are going to have possibly a new higher swing high. So this is now, for me, a bullish move to the upside. Now, if you're an Elliott wave trader, you'd be saying that this was a first wave, big deep retracement, second wave, impulsive move to the upside, third wave. This becomes the fourth wave. It stops at the top of wave one, so that's valid. And now we're looking for a break higher for wave five. Now, after a 5-wave impulsive move, we get some sort of correction that can be all the way back down through the sort of impulsive move that we saw to the upside, or it could just go sideways. So we don't know what's going to happen there. But if we were to look back through the price action, we can see that there is a level of imbalance. An imbalance level for me is a high on, as we're going higher, we're looking for highs that don't get tested. So this high here, this red candle high from the 14th of March, you can see that 16th of March low came in, tested that and bounced off. Whereas the high from the 15th of March, we haven't tested that. So that to me is a significant level of imbalance. Big impulsive moves to the upside, lots of volume taking it up, but not a lot of trading actually at these levels. Now, if we look to the right, We've also got this level here and this level here. So potentially that's the lowest one. So if this is wave 5, we could come back down to test the highs of 18th of April. Obviously, that's around Easter weekend. So maybe they use the 19th of April here. But yeah, just be aware that this wave 5 could terminate in the near sort of future, and then we could come back down and test some of these daily highs. Now, the reason why I say the wave 5 could terminate soon, wave 3 has to be the longest wave, so we're in no fear of that because it's longer than wave 1. Now, wave 5 could be looking at this level or this zone up here. Now, on the 9th of February, there were some buyers, they took out a swing high. They were the last of the buyers before we had this big dip down. So if this was a 3-wave corrective move, so from the high to low, so that's a 3-wave corrective move. If I just make that red. These were the last of the buyers within this corrective move. These buyers probably had their stops below some of these swing lows. They've been stopped out. The sellers that used these buy orders to sell into, they probably have their stops above here. So there'll be some buy stops up there. Now, if price was to get through this price action here, then we could accelerate higher and then, take out the all-time highs. There's no stopping that. However, the sellers here, obviously a big red candle compared to this green candle. There could be a lot more orders still up there as they defend this zone. And obviously anyone that was holding along just wants to get out, break even, essentially, because they've been through a lot of pain. So I'm looking to see if we get a push up and then some sort of corrective move to the downside, taking out some of these liquidity levels at the imbalances. So that's what I'm looking for. Now, obviously today we took out the swing high. So we're looking at these highs here. If we take out this high here and we push into the low of 9th of February, that could be where we look for the pattern that I talked about yesterday. Just as a reminder of the pattern that I'll be looking for, we're looking for a move up. So that's a bullish move. It's taken out a previous swing high. Then we're looking for some sort of correction. Now, if there's a correction that takes out the previous swing low, then that obviously signifies a possible change in trend. And then we're looking for a retracement before a continuation to the downside. Now, I said yesterday that that retracement could be deep or it could be shallow. It was kind of just waiting to see what happens. But if we consider that we've just taken out a swing high here, so we took out a daily and a swing high, any orders that are up there, the buy stops, people can sell into that, or there could be, like I said, buy stops above here that people sell into before it gets into this supply zone. So this is the pattern I'll be looking for on a smaller time frame around these levels. Now, the levels themselves, the daily highs are 35,386 and 35,438. So if I go down to an hourly, just have a quick look, see what's going on. You can see here that we got to that previous swing high. We had a sort of rejection, so we had a little swing high formed on the hourly, but they've just taken that. Now this high from this candle is acting as support. So I think we're going to go up, take out the 35,438, and then see if we can push into the sort of that supply zone like I just mentioned on the daily. So we're not seeing it yet. I'm just sort of saying that I'm looking for that pattern to sort of come at some point soon and then have some sort of price action like that. Or if we don't get that pattern, if we just continually keep sort of making sort of dips and the buyers keep buying the dips, then we're looking to see if we get back above that supply zone, breakout, retest, and continuation to the upside. Okay, that's what I'm looking for, and that's why it's earnings season. So Dow Jones is going to be affected by that. We've also got central bankers speaking, so the Dow Jones will be affected by that. Look out for inflation and yields, and yeah, just keep your eyes on the news, and I'll speak to you again tomorrow.